Steffi. Good morning, everybody. Thank you for being here. I think we are very much thrilled to be on stage today with you and to end these 48 hours of DLD Munich. I think we've been speaking of war in Ukraine, we've been speaking of climate change, of course, we've been speaking of issues around privacy and data in the big tech company. And one of the convictions that the three of us are sharing today is that the world won't look like the past decade. I mean, it's obvious considering what's going on over the last years and months. And our conviction is very much that Africa is building technology for the real economy and maybe even leading. The acceleration, for some of you who know about African ecosystem, the acceleration of the African tech ecosystem has been huge and massive over the last 3 to 5 years. Let me start with a couple of facts and figures. In 2021, according to Partech report, African tech startups have raised $6 billion. It's 3 times, and it's growing, 3 times more than the global VC industry. So if you imagine that in 2019, African tech startups over the year raised $2 billion, it took us 7 weeks in 2022 to raise the same amount. So the acceleration is very much happening. And this happened in spite of a global pandemic that created a contraction, an economic contraction, and a contraction of the investment market. And the organization that I'm leading, we know that very well because we've launched a bridge fund, the first bridge fund in Africa in 2020. And we've managed to close 10 deals in a few months and with amazing success rates. And we're very happy about it. Imagine also that 2020, in spite of the global pandemic, saw one of the first major exits for the African tech ecosystem with a Nigerian startup called Paystack, acquired by Stripe for $200 million when Stripe raised 600 Series G. Another very important fact to have in mind is that 2021 saw major deals, like mega deals, happening on the continent. We have a lot in fintech, for example, with MFS in Benin, who raised 100 million, I think, for Series C.
Yep.
Correct. We saw also Wave, a Senegalese startup, doing integration of payment services, mobile payment services, $200 million Series A. This is happening for real. Other companies such as Grow Intelligence, whom I think the leading investor is here with us in the room, raised 85 million Series A and Series B, and is now preparing a 1 billion Series C. So the ecosystem is really happening. Now, as we say at DLD, reality rules. So there are still some hard facts and major biases and major issues around access to funding. First gap, of course. Over 90% of African startups don't find any financing at all. Only 20% of SMEs would have access to bank loans. And there's only 7 unicorns in Africa, while if you compare with India, which has the same demography, has over 900. And there's no structural reason for that. Second bias, geography. The 70 to 80% of the investment goes to only the big 4, Nigeria, South Africa, Kenya, and Egypt. We need to change that because Africa is 54 countries. And last but not least, this is a global issue, obviously, 1 to 2% of the total funding going to African startups goes to female-led startups, obviously. And this is completely nuts, because when you think of the country, do you know which country in the world has the highest rate of female entrepreneurs? It's Ghana, with 45% female entrepreneurs. So there's no reason for these gaps and biases to continue. So with that in mind, I'd like to ask our speakers with one first question. Fatoumata, you've been working on dealing with real economy issues and supporting startup building real economy solutions with technology, and you have made yourself a mission to tackle inequality throughout the world with technology and capital. So how do you do that? How do the startup you support create and solve real economy problems with tech solutions?
Thank you, Stephan-Eloïse. I have to say that Africa is the best place in the world for entrepreneurs to seek opportunity in adversity. And I think you laid out firsthand so many challenges our ecosystem is facing. But as a continent, as you all know, we are 1.2 billion now. In 30 years, we'll be 2.5 billion. No other continent has faced such a high demographic growth in such a short period of time, which means we need to find very quickly a very massive way to accelerate the access to healthcare, education, financial services for the many, to help the vibrant SMEs that you mentioned that are the backbone of our real economy, to have access to market, to have access to capital, but most importantly, to create more jobs. Because today we create every year 3 million net jobs in Africa. We need at least 30 million net jobs per year to cope with our demographic increase and employ our youth. The good news, and that's actually Janngo's mission statement, it actually means future in Fulani, is technology and capital are a very powerful way to help leapfrog development. I will give you some examples. For instance, during the pandemic, we invested in a company called IMSP. And in 18 months now, it has delivered tens of millions of medical supplies worth more than $2 billion to 32 African countries and 11 Caribbean countries. And all what it does is to connect manufacturers of vaccines, of test kits, of ventilators, of PPE to those who need it the most, whether in governments or hospitals or pharmacies. Another example in Nigeria, a company very close to my heart because it's also female-led, Sabi. What they do is basically they are platforming the informal economy. So you might not know because here you go to the, I would say, modern supermarket for your grocery shopping. But in Africa, we have actually 10.5 million small mini retailers, mom and pop stores owners. And these people, they don't have a very easy access to logistics or to finance or even to market to sell. Well, Sabi in Nigeria, in 15 months, has managed to platform 200,000 of them. And what they do today is they procure $200 million worth of groceries, food, tomato, onions, oil, anything African middle class need to be able to reduce cost, improve efficiency. And today, because they are selling online, they actually have a track record, a performance history that is enabling them to have access to funding by SME financing or by banks. And this is very important. In Senegal, for instance, our portfolio company Fleety is really transforming mobility and transportation. But what I'm proudest of is they do it by reducing fuel consumption by 30% on average. And most excitingly, we invested with our first vehicle in 11 startups. 56% of them are female-led. I don't say yet, and we realize a 5x cash-on-cash multiple. So the good news is, in Africa, you don't have to choose between doing well and doing good. These challenges are actually opportunities, and we really need to be able to grow that together. Yeah.
That's a great way to put it. Thank you, Fatoumata. So we have to choose between doing well and doing good. Khaled, on your side, you've been with AfricInvest, you've been pioneering investment and Pan-African investment. How do you see, so same question as Fatoumata, how do the startups that you support are solving real economy problem? In which geographies are you looking at more primarily? What are the sectors? We spoke a lot of fintech, obviously, a little bit of retail. Is there any other verticals and sectors that are blooming in Africa?
So they are. I think Africa is perceived as a continent with huge inequalities and huge gaps in terms of inclusion. And probably the biggest one is the financial sector. The financial sector has really been built over time to basically serve the interest of 20, 15, 25% of the population, depending on the countries. And so that provides huge opportunities for startups that can use basically technology, access to the internet and smartphones, basically, which are becoming have been democratized over the years. And so we have, specifically in the case of fintech, if you consider today that probably 97% of transactions are still cash, whether on the B2C or the B2B side, there's very interesting opportunities there to transform several use cases in terms of basically electronic payments. And the model has been developed most in Africa is mobile payments. Probably most of you have heard about M-Pesa. M-Pesa is specific to East Africa, but the model of mobile payment is developing everywhere. So one transaction that we've done was basically investing in a company that is connecting all of those mobile wallets in between them to enable interoperability, but also to enable cross-border transactions. There's a lot of trade that is happening between countries. It's extremely difficult for people to clear and to transact over those trades. And this company called MFS, which is present in over 20 countries in Africa, is basically helping this fast transaction to happen. This is a model that's been very successful, obviously, in Africa, and also is basically filling the gap that is left by governments not being able to build the right market infrastructure for fintech to happen. Another interesting sector today is education. In the education sector, if you look at the needs for digital skills, for instance, for the next 10 years in Africa, we need about 220 million people with digital skills, just for the needs of the continent. Not talking about basically the digital skills that you would need to export to the rest of the world, specifically to Europe and to Asia. These need complete new models. We cannot build, we cannot train as many people with a model that is basically a brick-and-mortar model based on universities. We don't have the professors, we don't have the money for the infrastructure, and therefore technology can fill that gap. And so one of the investments that we've done recently in a company called Go My Code is basically trying to provide an education platform, which is both technology, but also a mix of physical interactions with coaches to train coders, to train people with digital marketing skills across the continent. It's a young boy who started his company at 19 years old, and with only $600,000 being raised, extended this company into 7 countries in Africa, just to understand the massive opportunities and the depth of these opportunities that you can see on the African continent, and that are much lower-hanging fruit than what you would basically find in other countries where you need to find very sophisticated business model to succeed into specific sectors.
I really like what you put about education in Africa. I used to work for a global leading online education platform, and just a fun fact again, I realized when I joined the company that this company was training 3.5 million students every month with free courses online, and 20% of the students were based in Francophone Africa. And when you would compare the courses followed by the African students, they were technically more sophisticated and complex than the courses followed in the US or in Europe. So let's say in Europe you would see PHP or HTML5 courses being followed, while in Tunisia, for example, you would see Angular or Java or Python as as top courses. So that tells you something about the talent pool in Africa, which I'm sure our co-panelists are also sharing conviction with. So Fatoumata, if I get back to you now, considering what you just described regarding the ecosystem and what Khaled also just described, would you consider Africa as a unicorn, as a potential unicorn factory? And the question behind that would be, how do you scale businesses in Africa? It seems to me that a lot of the players on the game are looking at Africa the same way they would look at Europe 20 years ago. It's a lot of different countries, it's lots of different languages, nothing is equal, nothing is similar, it's so complex to scale, and how do you make business with that? So what's your opinion on this?
Stephan-Eloïse, that's an interesting question, because I think you have exogenous answers and endogenous answers. If we start with the ecosystem answers, I think if you want more unicorns, I founded the first African unicorn, which means you'll have a valuation higher than 1 billion. It means you need more funding to be able to help these unicorns. 2, there is a very high and overestimated perception of risk in Africa, and underestimated perception of opportunities. And actually, my president, I originally come from Senegal, Macky Sall, was saying last week that we need the creation, actually, of an African rating agency, because the level of risk today that is perceived by investors is not reflective of the actual risk. And again, on the risk topic, you have like direct and indirect risk mitigation mechanism when you are an investor. So for instance, in Europe, you have the European Commission that came up with something called Boost Africa. And what they do is they select some funds. We've been the first fund selected in Africa. And basically, they give you a first loss piece. What does it mean? It means that it covers some of the losses of the fund, and it mitigates the risk-return profile, which means that more commercial investors can come and feel confident, right? And internally, the way we de-risk, at least at Janngo, is we don't only invest financial capital, we also invest what I would call operating capital. So we have a team of CTOs, CMOs, CMOs, product owners, that we give actually for free to our portfolio companies to achieve 3 things. 1 is to find product market fit faster. 2 is to hyper-grow better while having good unit economics. And 3 is to expand, because as you said very rightly, if you're lucky enough to be in Nigeria and Egypt or South Africa, there are chances that your market is large enough for you to have the scale to be a unicorn. But if you are not, if you come from Senegal for Togo, chances are high you need to cross a border. And this is why it's really important to be able to help the companies. The good news is when you give them that, they're able to achieve as well and sometimes even better than in other ecosystems. And as you said, like 10 years ago, you had 1 unicorn. Now you mentioned 7. From stealth mode startups, I would say that we have 11 of them today. But we need more. As we said, India is far ahead when we have actually more mobile internet users, more mobile devices in Africa than in India, in excess of millions. And we have, same GDP, same population. So I think if we also work on the risk perception, on the risk mitigation, and we increase the level of funding, there will be more unicorns for sure. But one last point, I think it's really critical. We wanted to have a reality check here. And there is one question, which is, do we only want unicorns, right? In the Silicon Valley, tech is actually increasing sometimes inequalities. When I go to San Francisco, I'm shocked by homeless people in the street, right? We don't want that model for Africa. We want unicorns that will be also solving inclusion problems, social impact problem, environmental problem, and we see more and more of them. And I think this is a model that we can teach the world somehow.
So scale with inclusion. Thank you, Fatoumata. So let me get back a little bit with what you've just said regarding scale and like how do we support scale up in Africa. And Khaled, let me get back to you because with AfricInvest, you've been pioneering, really, the VC industry in Africa. You've been raising funds for, what, 10?
20-something years.
20 years, yes. So imagine. Can we imagine, it seems to me, and I'm sure that some people in the audience also have that image in mind, and also coming from a DFI, I think probably ask that question. It seems to me that is it possible to sustain social impact and scaling up without development aid and public funds money? So in other terms, is an African VC economy possible without public fund? And my question is obviously a little bit biased, but the question would be, how do you blend finance, public and private finance in Africa?
So we started very, very small with private funding, and very soon we only could scale across basically markets using public finance, especially international, bilateral, multilateral institutions finance. Why? Because Africa is a mosaic of 54 countries, and those countries usually do not talk to each other. There are exceptions. There are regions, basically, we have one currency. It is extremely difficult, basically, to fundraise at once for the continent, and so you need to find international investors. That picture in the VC space is changing. Why? First, you have lots of money that is coming from essentially the US, a bit from Europe, but a lot from China also. I'm talking really about the VC and in the technology space. What is happening is that basically that money is now creating entrepreneurs, founders that are exiting. Some have already exited, but there are more and more basically of this money that is going to be recycled into other startups. And that is basically the start for what Fatoumata was describing, which is basically an ecosystem that can self-fund itself by using its own investors that are basically that been grown locally and also mixed with money coming from elsewhere. So going forward, the vast majority from now of the money that is invested in startup in Africa is private. The role of public institutions, whether they are local or international, multilateral, bilateral, is basically to provide what Fatoumata described very well, basically a blended finance product, which basically can help people who have, let's say, a perception of Africa that is where the risks are inflated, to be able to put their money while basically protecting some of the downside risk. These are products that we see more and more into developing countries, and that can help basically solve some of the most complicated problems that exist in terms of social inclusion and economic inclusion, for instance.
Yes, and with the uncertainties coming on around the global economy, I'm sure these balances will also be probably reconfigured in the next coming years. But let's hope it continues in the right direction. Fatoumata, I want to ask you one last question. If there was a call to action to tell DLD people and the community, the incredible community at DLD, for supporting Africa, real economy, tech startups, what would it be?
Well, I would say that overall we cannot stand seeing 15% of the world population today attracting only 2% of the FTSE funding. I would say that we cannot stand seeing a continent that is only representing 4% of the carbon emissions, being actually first and in terms of the climate change impact, in terms of floods, rising water, of rural exodus. We cannot stand seeing, as you said, the continent where you have the highest entrepreneurial activity worldwide for women at 26% average, Ghana at 45%, having a $42 billion funding gap. And actually, it's not only an equality case, it's also a business case, because of that, we miss $300 billion extra GDP, which is 10% of our GDP, right? So there is a business case to it. And I think Steffi was saying before that DLD is an amazing place for reflection, but it should be a place for action. So at the end of the session, you need to go and find Egosa in the room, or Khaled in the room, and Fatou in the room, and everyone that is really working on bridging those gaps to really be able to leverage technology, capital, to leapfrog development in Africa, because we show that it's possible, but we need to move fast. So invest now, because the train is about to leave the station.
Thank you. That's very much. I think it's a great concluding word. I would like just to emphasize one thing. With Ukraine war, Africa is going to be even more strategic, and what Fatoumata just said won't slow down, in my opinion. I mean, we know already that Africa is, the issue of the integration of Africa on global value chain, and I know the last panel would also kind of addressing that in the end. Is also depending on that context. So we definitely need to all collaborate to support African tech startups in building made in Africa technology solution for real economy problems. Thank you very much.
Stay a moment. Who of you, and I mean it very seriously, would go with DLD to Africa to do a DLD in Africa?
Of course.
When should we do it?
Let's do it.
When this year,
Do it.
I promise here in front of you, on this distinguished panel in front of you, that you will get an email from me announcing DLD Africa this year. What I just said, maybe it's a misunderstanding. You get the email soon. But this year, you get the email this year. But maybe it's maybe we do it in the beginning of next year. But we do it in the range of 8 months. Okay?
Okay.
I promise.
Let's do it.
Keep my words.